Let's talk to, in fact, Rushil Thakkar, the managing director of Rushil Decor, who is joining us now. Rushil, thank you so much for first of all taking the time and speaking with us at NDTV Profit. My first question is with regards to how we've analyzed your income statement. Just want to understand, you've already given FY27 guidance of that 1,000 crore odd mark. In the last 3 to 4 years, there has been a tepid growth, and this I suppose is considering the growth in terms of how industry is going in terms of real estate as well. Plus, there is raw material cost inflationary pressure continuously on you. But what gives you the confidence of achieving that 1,000 crore in FY27? What will be the triggers going forward?
So first of all, good afternoon, and thank you, Mahima, for the opportunity. So as we look to grow towards the 1,000 crore company, so first of all, our jumbo project is now in place, and all the research and development which has to be done has been in place, and we are opening up the markets in Europe and Northern America and Latin America, which will grow our export revenues in laminate. In terms of MDF, we are growing with the value addition. So our target is to reach 50% of the total capacity with the value addition, which will give us another boost in the top line and also in the net margin ratio. So we are very clear with and focused with our vision, what we want, and that's how our company will be growing at this year for 1,000 crores.
Okay, Rushil, with regards to your margins, you've said that you'll do 8 to 9% this year, but that will go to 10 to 11% next year. Considering the West Asia conflict into consideration, that has probably pushed your raw material inflation further, if I'm not wrong. Do you think those margin levels are still achievable in FY27? What is the hit that you've taken in FY26, and what is it that will be followed through in FY27?
So yes, price hike we have taken in MDF roughly around 15%. Our first hike was in April first week, which was around 10%, and the second hike we took somewhere around 10th of April, which was somewhere around 5%. So, and looking at the current scenario, yes, our prices are sustainable. When we talk about our HPL business, we have roughly taken 18% of price hike in 1mm, which is our premium product, and slightly lower in the lower range of the side. So margins are retainable. Talking about the chemical prices, yes, the chemical prices has gone up drastically, and we are trying our best to procure at the best rate possible and sustain our margins what we have already committed. But speaking towards the margin for this year, yes, we are expecting to have EBITDA margins of roughly around 11 to 12%.
Rushil, with regards to the overall cost price that has gone up for you, just want to get a sense as to how much of West Asia conflict has actually impacted you right now, and will that hit be taken forward in FY27 is what I want to understand.
So currently, yes, our strong markets are Far East and Gulf. Gulf has given us a good hit for MDF exports, but now we have slightly looking towards the other part of the world as well, and we are exploring some more customers. So we are expected just not to depend on one country for our MDF export, just one continent for our MDF exports. And talking about laminate, yes, laminate, we have a vast number of countries, like we are operating in more than 63 countries currently. So West Asia conflict has given us a hit in terms of MDF, but in laminate, yes, we have other trajectories where we are working very strongly. And talking about again coming back to the raw material side, yes, our majority of the raw materials in chemicals come from Gulf, and which has given us a higher impact in terms of cost increase.
So then, Rushil, I want to understand as to what's your difference between, breakup between your exports and domestic sales right now, and how will that fare in FY27? How does that change things, and that, having impact or bearing on your margins?
So first of all, when we talk about laminate, our laminate turnover is 65% from exports. And when we talk about MDF, our 20% average is out of the exports. And combining both together, around 25% of the turnover comes from the exports. That's how the blend of the turnover is. Domestic in MDF is the major part where we are playing, and it is a major part of our top line as well. So considering that, yes, the ratios we will try to increase up to 30% for exports in both the products. That's what our target is.
With regards to your debt, Rushil, that stands at around 139 crore as of FY25. This is the long-term debt that I'm talking about. Any plans of bringing that number down in the near future? I mean, you might have reduced it in FY26 already. So if you can give us a perspective on that number and then going forward in FY27 as well.
So our yearly repayment to the debt for the long term is roughly around 50 crore rupees every year. So considering that we have already paid the 50 crores for this year, so we consider ourselves as a debt-free company in upcoming 2 years.
Rushil, the other aspect is with regards to your cash position, because on an average you have maintained that cash position anywhere between 5 to 10 odd crores. Do you think that you have more requirement in terms of where the cash balance stands, and would you be looking for any fundraise going forward, maybe for that reasons?
No, currently we are comfortably operating with our cash ratio what we have, and in current stage we are not at all looking for any fundraisers from the public or any kind of offerings from the public or any private equity. And we are clear with it that in this financial year we will not be raising any kind of fund.
Okay, got it. Rushil, for your ROCE number that has declined in the past 2 years from that 17% mark to that 10% mark, if I'm not wrong, any plans on internal targets to raise that number going forward? And if yes, any range that you would want to give in terms of how that number will fare in FY27?
So if we compare our ROCE with FY23, the 23 was something really very, very good year for us because of certain things. We had a newly installed capacity in hand and everything was online. But when coming years ahead, there were too many domestic competitions started, because of which there were too many internal domestic competition and conflicts going on. Now it is a time that we are seeing that we'll be growing, but I can't give you the indication at with what percentage the ROCE will be growing. But I would assure you that the current ROCE which we have will be maintained in any case.
So then, with regards to your installed capacity right now for both laminates as well as MDF board, laminates I think utilization stands at 89%, which is a very healthy number, and so is for MDF boards, which is at 72%. What is your blended utilization at currently right now, and how will that number go going forward in FY27? Because even the jumbo laminates manufacturing is, if I'm not wrong, now fully operational and will start contributing to your overall capacity utilizations.
So in HPL, when we see, we divide it into two parts. One would be the jumbo facility, which we are operating currently at roughly around 25%, which we have targeted to utilize more than 55% this year. Talking about the old facility or old capacity, what we have, we are utilizing at the peak somewhere around 85-88%. And in laminate, there are too many permutation combinations on which the capacities are calculated. So in the older side, we are not expecting that we will be having a long difference between the capacity utilization. It will stand somewhere around 85 to 90% in the depending on the project, depending on the product mix. In jumbo, yes, we'll be increasing to 55%. Coming towards the MDF, our capacity blended with both the units, Visakhapatnam and Chikmagalur, is somewhere around 87 to 90%. And in our Chikmagalur facility case, we have almost utilized sometimes up to 120% also. So we don't see a capacity concern rising as of now for this financial year, and we are very confident to utilize that MDF capacity to about 90% as well in blended form.
All right. Thank you so much, Rushil, for helping us answer, in fact, all those questions so candidly and taking out the time and speaking with us at NDTV Profits. That was, of course, the management of Rushil Decor. But